At the dawn of the new year, the risk-aversion sentiment is prevailing among traders. The US dollar posting over its safe haven appeal, along with the US Treasury bonds in a high demand. And this mood is related to the situation unfolding in the Middle East, where tensions are mounting. Even the most pragmatic and iron-willed traders seem to be on guard. However, it's important to take into account that today the minutes from the last Fed meeting are slated for release, and these minutes are expected to encourage those looking to sell the dollar. Consequently, the trend may reverse and dollar bears will likely start seeing profits, provided that the minutes will reflect the Fed's plans to reduce the interest rate discussed during the meeting. On the flip side, there are some other factors that may exert downward pressure on the US dollar. At the end of this trading week, the United States employment report will be released, which, according to prevailing forecast, is poised to deliver a rather grim outlook. Indications of a weakening job market could prompt the Fed to reevaluate its monetary policy and seriously contemplate the necessity of sooner rate cuts. Notably, approximately 15% of market participants anticipate the first move towards easing by the American Central Bank in January. Perhaps the employment data will further bolster this likelihood, which in turn would undermine the dollar's position. A glance at the chart reveals the single European currencies struggle to withstand the vulnerability of the dollar. Presently, numerous analysts contend that the euro lacked a compelling reason for its initial uptrend, and we are not now witnessing a correction towards more equitable levels. It would be prudent to lend an ear to the skeptics and factor in the outlook. According to the assessments, the overbought condition is expected to persist until sell orders are firmly established, targeting levels of 1.0878 and 1.0864. The scenario mirrors that of the pound. The chart indicates a strong likelihood of tilting in favor of the dollar, especially following the release of the final PMI data. And this report highlights the persistent contraction of a UK manufacturing activity, extending its decline for the 17th consecutive month in December, the sinking deeper into negative territory. Consequently, sellers anticipate a lucrative opportunity as they aim for downside targets set at 1.2543 and 1.2523. How we're going to be in the short term in financial markets, we will definitely tell you in our next news releases. Don't miss them. Subscribe to the channel and follow news with us. See you soon.